everybody's mind, and it is, it's, what can I say? It's an American dream, and I really, really, my goal is everybody to actually get that American dream and make it at home. And it is, I'm not gonna say it is easy. I'm not gonna say it is you snap your finger and you have it. No, it is work. It is a process. And it's also so doable, and you can do it. And that's really what we're gonna go through today. What would it take for you to become a homeowner? And what steps you have to go through, and what do you watch for? And it's just amazing time. I understand we never had this time before as far as COVID and everything we're going through. Interest rate is so low, so it makes your payment so low. So honestly, to get started. So we'll wait just a few minutes for everybody to hop on. I really, really encourage each one of you, if you have any questions, once we're, you can stop me, or once we're done, I can answer all your questions. The goal is, when we're done with today webinar, you guys, all of you would have a full, complete understanding what would it take to get you from here to your home. That is the goal, to get you from being a tenant to own your own home. If you live with family and it's mom and dad's home, to get you into your own home. So that's really the goal for today. And we're gonna go through what it take as far as credit, income, programs, down payment, and all of that. So that's really the goal for us to go through all of this. So I see Renee. Hey, man, it's been so long. It's good to see you guys. By the way, you guys, Renee is all the way in Madeira, and as crazy as that sounds, I went to Madeira a couple of times because I sold to their family and they moved. They were my client here in Norwalk and they moved to Madeira. So, so I do go to Madeira, believe it or not, and that's a 6 hour away, you guys, just to kind of let you know that. Hey, Wasfi. I guess I'm supposed to wave. And so it's really, really, it's just a different place. They have horses, and they wanted to have much bigger land to have horses. And it's a beautiful place, let's put it that way. So, okay, so I think what we would do, we'll wait 1 more minute, and then from there, we'll just actually get started. And hey, Anthony, so I would really, 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 really highly recommend, take notes. I will share some slides with data with you. And again, if you're watching on Facebook, please go and register on a link in my bio, so you can be able to see the slides, the one I'm going to be sharing. All right, you guys. So let's officially start our buyer webinar. So honestly, all of us, if you remember, if you were dreaming, and it was your first Christmas, and you actually knew you were getting a gift. If you go back to that day, all night, the night before, you were not able to sleep because you were thinking, man, about the gift you're gonna get. How are you gonna play with it? How are you gonna use it? What is it? Because you really didn't know. Honestly, buying a home, it is that Christmas morning with a gift. And the reason I say we all dream by having our home is because it's so tangible and it's so financially freedom, and it is so proven as what you are going to be making. And I wanted to share with you what really event goes through in order for you to really be thinking of buying a home. So I have one of my clients, amazing, beautiful family. They lived in the rental for 20 years. Everything is going beautiful, nothing wrong. And all of a sudden, the owner of the home had a change of event in their life, and they just came in, give them a 60-day notice. So now you're facing a 60-day notice. You have not been in the rental market. You don't even have a clue what the prices is as far as the rental, and you were comfortable, okay? I have another client. There was, you know, family living together. There was 6 of them in a 1-bedroom place, and it's like, you know what? It's time to get a bigger place. It's time to move on. And I have another client, and that was really the triggering point for them is when COVID happened, and touching and, you know, making sure everything is sanitized and all of that. Well, when you are renting, you are using a laundromat, you are using a machine everybody touch, and your clothes goes in there, and your kids' clothes, your family clothes goes in there. And honestly, it was one of those is like, you know what, I can't deal with it no more. So regardless where you at in that transition, if it is we need to get a bigger home, or we are renting, or you know, there's no parking when you're coming home at, you know, 5, 6 o'clock, and you're circling for 10-15 minutes to find a parking spot. Or, you know, you're on the 2nd floor, and you're taking, you know, your grocery up. And so whatever the case you are at, I really want to share with you is why we do what we do as far as figuring out what would it take to buy a home. So there is 3 components you're going to be looking at in order for you to get yourself ready to be able to buy a home. The first one is your credit. So as you guys know, there is 3 credit score when the lender runs your credit. It's TransUnion, Experian, and Equifax, okay? And whatever that middle score is, that's what the lender go by. So when you stop and look at that, a lot of us is like, you know what, I'm not really sure if my credit is gonna make it. I'm not really sure I can get into a property. Well, most people get on Credit Karma and they find out what their credit score is. I want to say is not 100% accurate, but it kind of gives you a gauge where are you at with the credit. Now, there is a few things you can do to get your credit score higher. So there is one way of doing is paying down your debts, so you can actually have less than 20% of your maximum limit. So for example, if you have a credit card and the max limit is $1,000, you want to keep your balance under $200, and that would automatically increases your FICO score. Another one is a huge one if you are able to ask a family member or a friend to add you as an authorized user. And when you get added as an authorized user, you guys, whatever that person history is, so let's say it's a mom, and mom have a credit card for 10 years, and she added you on as an authorized user, all of a sudden you have a 10-year history, which is mom's history, and that is increases your FICO score so high, so fast. One of the things I do want you to pay attention to, if you make a late payment and it's a recent late payment, that will drop your FICO score 50 point minimum overnight. So you really want to make sure you do not make any late payment. Now, if let's say the late is a year ago, then your FICO score gets rescored and it goes up on its own. You really don't have to do much to it. If you have collections, I would say let's wait to make phone calls to the collection until we look at the credit and see what we need to do as far as that. So when we're doing a loan, depending on what kind of a loan you are getting, if you're getting an FHA loan, then you need a minimum 620 FICO score. Some lender, they do give a loan at a 585, but it does cost an arm and a leg, and your interest rate is higher. If you are doing a conventional loan, then of course they want your FICO score 680 and above. If you're doing a CALHFA loan, then you need a 660 FICO score. If you are doing a VA loan, then 600 FICO score will make it work. So that is as far as the credit. The second one I want to go over with you guys is the income. So when we're going to income, you guys, there is two things as far as income. There is one, you get W-2s and you get paycheck stubs. Okay, the other one is you are a self-employed and you get a 1099. So when you are getting W-2s and paycheck stub, then is an automatic as far as your qualification, whatever you make, whatever your debts are, then you do qualify. Now, when you are doing a 1099, then that is a bit different. Most of the lender, they need a 2-year average of your income. If you have a high FICO score and you're able to get an approval, a DU, which is a desktop approval, you can get away with only 1 year income tax when you're doing a conventional 5% down and you move on with that. Now, remember, if we're doing a CALHFA, which is a down payment assistance program, then they will need 3-year income tax in order to show you have not owned a property. So, so with that, it's a little different when you are having a down payment assistant, or you're doing just a regular FHA, or you're doing a regular conventional program. Now, because of COVID, some people went on furlough, some people out of work. One of the lender requirement nowadays is you have to be back to work for 1 month in order for you to be able to qualify for a home. So, so I would say when it comes to your income, you can always, you know, if there is someone to be able to use as a co-signer, which that would be a perfect scenario. And that co-signer could be a mom, could be a dad, could be a brother, a sister, you know, and they can be able to use. Now, as far as your income, there is income you get out of Social Security, and that is income you can use to qualify. There is income you get out of a permanent disability, and that is income you can use. There is income you get out of IHSS, because you're taking care of somebody, and that is income you can be able to use. So any form of a permanent income, child support, that is an income you can be able to use. So you can always add all of those income together in order for you to be able to qualify, okay? Now, the third component we are going to be looking at is your down payment. So let's back up a little. There is 4 different ways of being able to finance a property. There is a VA, and that is require you to be a veteran. And with that program, you do not need a down payment. So the VA will loan 100% on that property, okay? Now, If you are a veteran and you are considered an 80% disabled and you're getting 80% insurance on the disability, then there is no funding fees. So actually your loan amount will be just the price of the property. If you're not disabled, then it's a 2% funding fees added to the price of the property. The second way of going is FHA, which FHA is the HUD loans, and your down payment is 3.5%. And of course, you have closing costs, the same as the VA, you have closing costs. The third way of going is the CALHFA, which is you will get a down payment assistance as a silent second. You get closing cost assistance as a silent third. Both of these loans, there is no payment required. When you do sell the property or you refinance the property, you gotta give them back their money. One of them, it has 0 interest, and the other one has simple interest. So you really cannot go wrong. The fourth way of financing is going conventional financing. And on the conventional financing, you guys, you can do a 3% down, you can do 5% down. Now, anytime you put less than 20% down payment, you have PMI. PMI is a private mortgage insurance, gets added to your monthly payment. So if you have the down payment and you have a good FICO score, then conventional will actually lead you to the lowest monthly payment, okay? Now, if you don't have the down payment and your FICO score is a 660, and you say, well, Nahid, you know, maybe I'll wait, I'll save up. Well, it's a beautiful theory to say, I'm gonna wait and save up. The truth is, we know life has its own turn. We don't save up. We try, we have good intention, but we don't save up. So honestly, get your foot in the door. And the reason I say the lowest payment on a conventional, because roughly your FHA PMI is 3 times what your conventional is. So if your PMI on a conventional is $100 a month, FHA is about $300 a month on the same price of a home. So, so that's what you have. Now, with all of that, you guys, I wanted you to think of something. Is what happened is with COVID, the interest rate dropped. The lower the interest rate is, the lower your monthly payment is, the more you qualify for. The higher your interest rate, the higher your monthly payment, the lower you qualify for. So always remember that. One of the things you do need to really, really consider is, we're doing awesome. Interest rate is beautiful. For how long? Eventually that interest rate will go up. So I wanted you to keep that in mind as far as the interest rate and how the market is going. So with that, I wanted to show you guys, I want to share a chart with you, and that is a statistics. So it's not something I made up, okay? And I wanted to share with you, hang on, screen sharing, host disable attendee screen sharing. Okay, so let's see if I can share. Can I share, you guys? Okay, so here we go. So I wanted to share with you is my the info spark. Okay, so this is the MLS, and what is showing up on here is we can put any city you want to know statistics on, and this is real stats based on now, you guys. So just Norwalk, because that's where my office is, and I went to single family homes, and July, the average price home in Norwalk is $541,759. Okay, now you guys look at this. When I go down to January this year, it was $503,400. So it went up $40,000. Okay, now let's go back to 2010, and I would love to go to July of 2010. Average price homes is $279,309. Same month 10 years ago. So if you look at that, is in Norwalk, it almost double the price of a house. So if you would have bought back in 2010, you would have doubled what you paid for it back 10 years ago. Okay, so, and it's not just Norwalk, you guys. You know what? I'm just gonna go to Victorville, okay? Because some people, they say, oh, Nahid, Victorville would be a little different. Okay, it's far, it's distance, whatever it is. But look at what's happening in Victorville. July, okay, now is $304,240, okay, you guys? In May was $300, so it went up $4,000. Now, let's go back 10 years ago, which it was in 2010, and I wanna go to July, which it would be the same. Average price range is $123,171. So Victorville is more than double. Is actually, when you look at 123, is 2.5 times. Okay, Victorville. So any city you guys would be interested to know about, we just put it on here and see what it is. And these are numbers. I'm not making up, you guys. So if you sit there and you go, well, you know what, Nahid, I'm just gonna wait, the market gonna drop. You know what? There is absolutely no statistic showing the market will drop at all. So honestly, I would say you might want to reconsider what is the purpose. Why do you want to wait? Is it really truly because, is it the money? Is it the income? Is it the credit? Or is it people telling you, oh, you know what, if you wait a little bit, the market will drop? Well, that's not what is happening to the market. So with that, you guys, I wanted you to see as far as how many houses closed. And this is in Victorville. In June is total closed sides. Well, you know what? Let's close sales. 226 homes sold in the month of July, you guys, in Victorville. So regardless what city you are in, if you are close or you are far, the market is going. There is no investment you can be able to put in, because literally when you are using the down payment assistance program, you're really doing about 2% out of your you know, your investment as far as the price of the house. So if the house is $300,000, you're really using like maybe $6,500. And with that though,
Renee is asking.
Say it again.
Renee is asking what's going on with the prices in Madeira. If we could look at it.
Let me put Madeira here. Okay, so Madeira City and single family homes in Madeira. So Madeira, hang on, is sales price. Hang on, it's crunching the number, Renee. Okay, so average price is $313,276. That's in July. And when I go back in 2010, it was $131,210, 210, Renee. So that is 2.5 times what was the price of the homes 10 years ago. So what I really wanted you to stop and think about is, can I put up $6,000 and 10 years later, I doubled the price of the house? So if you buy the home, like you bought it in 210 for 131, now it's worth 300. So if you spend $6,000, 10 years later, you're making over $200,000, you guys. So where can you be able to make that kind of money? And on the top of it though, keep in mind, your own home, there is not a landlord to come and give you a notice. Your own laundry room, so nobody's touching your stuff and your children's stuff and your clothes and all of that. Your mortgage payment is a fixed rate, so it does not go up, it does not go anywhere. And the bigger factor is you have a tax credit when you're doing your income tax every year and you get a return. So when you put all of those factors together, you guys, it is so well worth it. I'm not telling you go buy a house right now. What I'm telling you is get the information and let's look at your options. Let's see, is my credit good? If it's not, no problem. We'll figure out what steps we need to do so we can get the FICO score to where it needed to be, okay? Now, second one, I don't make enough money. Okay, let's figure out, do we have someone to co-sign? Is that an option? Or have we thought about maybe a family member or a friend and you go a partnership? Have you thought about, you know what? We can buy a duplex and you can do an FHA, 3.5% down on a duplex. You live in one, your friend live in the other one. Have you thought about that? Could it be family? Could it be friend? And you're just a partnership with that person, okay? Now, the third one, if you would look at it, the down payment. Well, that's awesome. What do we have? Do we have a 401k? We can pull up some money out of it so we can be able to put it as a down payment. Can I qualify for a government program and they can help me with the down payment assistance? So at the end of the day, you guys, there is options. Don't sit there and say, I can't do it. I am willing to let you say, I can do it. Once you figure out what your option and you truly cannot do it, great. Maybe in 6 months you can, maybe in a year you can. But for you to just sit there and say, I can do it, I really think I shouldn't do it just because you didn't look at your option, you didn't have the information, honestly, no. All it will take, that way you will know, all of you, all it will take is one phone call to me. We set up a Zoom together, or you're welcome to come to the office. It's about 15, 20 minutes. Get the information. We send it to the lender, and then we have a crystal clear what your options are. And I really, really wanted you to think of something, regardless your age, you guys. All of us are getting older. So one day we want to retire. One day we don't want to have a mortgage payment no more. One day we want to move to the most, magnificent place we're going to go to. In order to get there, you have to have a nest. And that nest is going to come from your investment when you're buying a home. So if you buy a home 10 years later, is worth double, you can take the 100,000, 200,000 and buy an all cash. If you want to go all cash somewhere back east and retire and chill, or put it on a down payment and buy a bigger home. So that is your options. And that is what real estate is about, the long-term investment. It's not an overnight, it takes time. So, with that, guys. What
homework do you need?
Say it again.
What homework do you need?
Okay, so the homework you need is your income tax. If we're doing a down payment assistant, then I need 3 years income tax, 17, 18, and 19. And the reason is that, you guys, not to determine your income. The reason is because they needed to determine you have not owned the home. So the down payment assistant, they wanted to make sure in the last 3 years you have not owned the home. Another thing you will need is 1 month of your paycheck stubs. You need 2 months of your recent bank statement, and you need a copy of your driver license and your social security card. Now, one of the things I totally forgot to mention, you had a bankruptcy, no big deal. As long as the bankruptcy is 2 years old from the discharge, you'll be able to qualify for FHA, no problem, for a regular FHA, for a down payment assistance program. Phoebe, you said as far as Las Vegas. So with Las Vegas, honestly, I assume they have the same program, but I'm not a Las Vegas realtor. But if this is where you want to go, let me know, and I will connect you with the best of the best out there to figure out what programs, what can you qualify for, and all of that. Now, remember, you guys, when you're doing an FHA loan, FHA is owner occupied. So in order to qualify is you have to work in the same city. So if you're having a job in Las Vegas, then great, you can do an FHA. But if you're having a job in LA and you're buying a house in Las Vegas, then FHA would not be, you know, a route to go, to be honest with you. So how about the Valley? Carmen, my girl. Chris was at the Valley today showing homes. So the Valley has the same programs. It's considered LA. So there is the option of doing a regular FHA with a 3.5% down, or we can do the CALHFA program, which is only 2%, and we need a 660 FICO score. So send me your homework and let me get you into your home, Missy.
What about home prices in the Valley?
You know what, honestly, okay, so let me put you home prices in the Valley. I would say, do you want to do Granada Hills? Because that's a beautiful place in the Valley. So with the average home prices in Granada Hills is $853. Let's go to Reseda. I think Reseda is going to be a little less. So Reseda, it is, oops, hang on, Reseda. Okay, so Reseda, you guys, average is $652. So Valley is a little expensive. So $652 in July, and in May was $627. When COVID started, which was, I will say, February, so March, 617. So look at this number, you guys, and I really wanted you to pay attention to this. March, 617, 938. July, that's only 4 months, is 652. That is $32,000 more, you guys. So if you're gonna sit there and say, oh no, the market is not going anywhere, this is stats, is the stats. I'm not making up that number. That is 7.2% higher, you guys, in 4 months. In 4 months. Now, when I go back in 2010 and I go to the same month, July, it was 310, and now it's 652. So it over than double the price, you guys. So so that kind of tell you something. Carmen, you want to do Northridge? Let me do Northridge for you. Northridge. Oops. Hang on. It's taking a minute. Okay, so Northridge, you guys, price, medium price, 821,228, and from March it was 799. So that's up $21,000 since COVID. And when I go back into 2010 and I go to July of 2010, which is exactly a year ago, it was 558. So $221,000 over. So that kind of give you where are you at as far as
we have people in Zoom asking the high desert or Hesperia and Pomona. So maybe we can look at Hesperia for the high desert.
Sure. Okay, so Hesperia, you guys.
Jose Silva is asking about Hesperia.
I'm sorry, say it again.
For Jose Silva asking about Hesperia.
Jose. Okay, so Jose, the average in Hesperia is 320, 304, and that is July. Look at the craziness, you guys. From the May, it was 302, which is 11.5 up, you guys. Now, go back to COVID in March, 309, okay? Now, let's go to 2010, you guys, and 2010 in July was, hold on, hang in there, 125,207. So that is more than double in 10 years. In 10 years. So, so honestly, Jose, if we look at your house, the one I sold it to you, how long ago is it? Has been like, I would say like maybe 5-6 years. It's a lot more. It's a lot more now. So honestly, yes. Go ahead.
Oh, no, yeah, it's more.
It's more, you know? So I can look at Pomona, you guys.
While you're searching, I have a question.
Sure.
What about everybody that's waiting for foreclosures?
Okay, so with the foreclosure, you guys, I wanted you, when people tell you those things, I wanted you to stop and think for a minute, okay? When COVID started in March, about June, the lender did a forbearance. And then when it got extended, and it was like 3 months, then it went to 6 months. And when it got extended, they gave the homeowner forbearance for 1 year. So when you stop and think about it, from June of 2020 until June of 2021, those people are not going into foreclosure because the bank's telling them it's okay. If you don't make the payment, it's okay, just until June of next year, and God knows what will happen in June. That's one factor. So those people are not going to go into foreclosure. Okay. Now, the second huge factor I wanted you to know is 80% of those people has 80% equity in their homes. I'm sorry, 20% equity in their homes. Meaning is, if the house is worth $400,000, they have $80,000 equity. Do you really think they're gonna walk away from it? They're not. They're gonna put it up for sale, make the money, and leave from there. So, so honestly, that foreclosure, the one people are saying or throwing those words out there, there is no stats showing that at all. And you might wanna look and see what article are you reading, and read on the bottom, who wrote the article, where is the information come from, okay? Another thing, I don't know if you guys know about it, as far as the refinance, Fannie Mae, Freddie Mac came up with, a couple of days ago, they're charging now, as of September, 0.5 point. Meaning is, if you're refinancing your home and the loan is $400,000, you are paying $2,000 more than if you would have refinanced it in June or in May. So that is what Fannie Mae and Freddie Mac came up with. Now on Pomona, you guys, the average price is $463,504. That is in July. And when COVID started back in March, it was $438. And 10 years ago, in July, exactly 10 years ago, it was $221. So more than double. So I am not really sure there is any city, the market in 10 years, your home does not double. So you tell me, where can you put your money? And I'm not talking about a lot of money, 2%. And in 10 years, you will double. And of course, you have all of the benefits along the way. So, so that's really what you need to look at. I don't know if you guys have any other question I can answer. I would say, honestly, there is no cost for you to have the knowledge. And what I mean by that is there is absolutely no charge whatsoever for me to have the lender run your credit to find out what option is available for you as far as, is my credit good? Can I qualify? What programs is available for you? There is nothing worse than looking back 2, 3, 4 years from now and regret and say, man, I should have, could have, would have. I would say regret is just a bad feeling, and you cannot bring the years back. I would say, look at your options. Based on your option, make a decision. Can I do it? Beautiful. If I can, then I'll wait. Yet, you know, I know a game plan. I am going in the right direction. It's a month from now, 6 months from now. Don't wait until the landlord comes and tell you you're gonna leave. Don't wait until, you know, it's just like, okay, what's my options? So that's honestly what I would do. And
where can everyone find you?
You better be sending me your homework. Go ahead. I'm sorry.
Where can everyone find you?
Okay, so you guys can find me on State of Grace. You can find me on Instagram is Nahid. Facebook, you're right here on it. So honestly, YouTube is State of Grace. So it really, I mean, like I said, I'm only a phone call away. Just DM me, just, you know, call me, text message me, whatever you need, we're here for you. Because I really, I mean, whoever knows me, I've been in it 32 years, you guys. So there is, my goal is for you guys to own your own home. And it's just it's a beautiful feeling when you just, when you own your home and you can do so much. Yet, you know, it's just a beautiful thing to come home to your own backyard, to come home to your own barbecue, to come home to your own kitchen. You want to paint it, you paint it. You don't need to have a permission from a landlord, and you don't need to wait for them to say, oh, well, I'm increasing the rent, or, oh, well, I need to move back into the home. So, and, you know, it's just totally different. Hey, Sally. So that's really what I would advise you with. So DM me, just text me, whatever I can do to help. Send me your information and let's get you into a home. All right. Thanks, you guys. Thank you so much for taking time out of your day to be here. And I really pray you guys got some good value information. And I'll be waiting for all your phone calls. Talk to you soon. Bye.